Happy Friday, Eric Bibel with the Bible team at Neil Home Loans. I'm hoping you all had a happy and safe Thanksgiving spent with loved ones and family, enjoying amazing food and filled with a tremendous amount of gratitude. And something that I'm also grateful for is the fact that mortgage rates yet again fell below 7%. And as we kick off this shortened trading day on Friday, the 30-year fix is at 6.95%, down from last week's 7.02. So, hey, seeing a six in front of it, definitely something to get excited about. So let's hope this rally continues and we can close out the year with some better pricing, more favorable interest rates, and kick off 2025 in a much better position. So with that, shortened week nonetheless, but a good amount of data. And ultimately, I want to take some time today to cover on the movement of the market, what drove the market movement, and what we can expect and how we can use this information with our clients. So I'm going to keep it condensed as we enter this holiday weekend, but nonetheless, let's recap. So first and foremost, Monday, an announcement came on the incoming administration around their nomination for Treasury Secretary. Markets really embrace this. Um, Treasury Secretary Bessent oncoming, and he's been revered as someone who is very fiscally restrained, which ultimately was a welcome relief to bonds, stocks, you name it, a good counterbalance from fiscal stance. And ultimately, the bond market really gravitated towards that pick, which is why we saw pricing improve at the beginning of this week. From there, geopolitical updates. There was a ceasefire between Hezbollah and Israel, where it did not have direct market impact. The overall trickle down were in creating some additional financial security, both domestic and international, was a welcome relief from markets as well. The other big market mover this week was the Fed's favorite gauge of inflation, personal consumption expenditures, PCE. That came out right before Thanksgiving, and we saw annualized as well as month over month coming right in line with expectations. And really the driver of this and why we continue to see market improvement and rates hold the improvements experienced at the beginning of this week was centered around, hey, it appears that inflation is under control, that the Fed has a good grasp on inflation, which in turn kind of extends the likelihood of additional rate cuts as planned by the Federal Reserve later this year and into 2025. So ultimately, where yes, it was a very shortened week from a data standpoint, there was a ton of information that trickled through, which ultimately was good for bonds, which in turn was good for mortgage rates. So the question becomes, how can we use this information to empower our clients as we enter the official holiday season? Where, yes, we know historically this time of year, things slow down as people's focus is elsewhere. Well, with interest rates retreating from their multi-week highs, this presents an opportunity for buyers that were still engaged to get a price cut, some savings with interest rates where they're at. So here, as always, if you're running into challenges in communicating this message to your client base, know that we're here to support you. We would love the opportunity to help you in communicating this message outward. And as always, wishing you a wonderful holiday weekend, a great Friday, and let's kick off the holiday season right. Make it a wonderful day. Thanks again.